Hey, what's up, folks? Welcome back to the channel. So it's been a few days since I've posted, and for the first time since I've been a YouTuber, I've truly been at a loss as far as what I wanted to say in my next video. I've been seeing all kinds of drama on this platform and this space over the last few days, and it can be entertaining, but I don't really want to get pulled into it. But I would say for new people that come to YouTube to find anything finance related, that's definitely something that's changed in the past year. This space kind of used to be, and it still is in some ways, a decent place to find pretty much anything you're looking for. But there's been a lot of drama in this space, and it can certainly be entertaining to get pulled into. And a lot of times I feel the urge to get pulled into it, but I don't really want to do that. But what I want to talk about in this video, I want to talk about how you can try to better differentiate a good channel from a bad channel in terms of good advice versus bad advice. Not that any of this on YouTube is advice, but it's important to understand when you're hearing someone that's a YouTuber to understand and be able to discern when you might be kind of led astray versus when you are getting decent content, decent advice, if you want to call it that. So one of the good things about a bear market, if you can find a good thing in a bear market, not only does it take some of the froth off the market when the market is exuberantly increasing, but it also separates the good investors from the bad investors. And I think anyone that has a positive return this year has done phenomenally. I mean, even if you have like a 0% return, if you have a non-negative return, I think that's an accomplishment in and of itself. And sometimes people on here make investing look too easy. And it's very easy to get pulled in when you follow somebody that has just had an easy time becoming wealthy. It's easy to want to emulate those people. And I'll be the first one to tell you that trading is not easy by any means. I mean, I've had successes, I've also had failures, and it's hard. If it were easy, everybody would do it, everybody would be rich, but that's not the case. And not only are we in a bear market, but we happen to be in one of the weirdest markets that I've ever seen since I've been investing. And I'm just looking at the futures today, for example, the Dow futures, which we focus so much on the Dow, but we really shouldn't, because the Dow is not really representative of the overall market. It's more so the S&P and of course the NASDAQ with all the tech stocks, which tech stocks got hammered today. So I'm going to rant a little bit, but there's going to be a point to this video that, trying to separate good information from bad information, right? So, and we're going to go over kind of what the outlook is for the market this week, because, like I said, I have that site that I'm using now, the one source of information. Although the market reaction to the news that's been coming out has not really made sense the last week or so, and we'll see what happens this week because we have CPI data coming out. Also Prime Day, I see at the bottom there. So all the major indexes are down tomorrow. A lot of the stocks I've been following are down. I had gotten into a really risky trade on Mercado Libre. And one piece of advice I would give, if you're going to do covered calls, or if you're going to do what's called the poor man's covered call, as far as options trading, which is where you buy a leap or a long-term, far out, a year or more out call option, you can do that instead of owning the stock itself. And then you can sell the option against it, which it functions as what they call a poor man's covered call, because you don't have to pony up all the money to buy the stock to execute the covered call. But in some cases, I don't even think that should be allowed. I mean, it is, and you can make great money doing it, but there's a lot of risk involved and it's very stressful. And I'll be the first one to say that. But I am going to bring up something I showed in a video a while back, which is my allocation. So while I do talk about risky trades and things like that on this channel, they're a very small portion of my overall allocation. And I would recommend what I do. That's why I'm on here. That's why I'm a YouTuber, because I think that I've done decently as an investor over time. Maybe not in the year 2022, but my overall allocation, I think, is stable from a long-term standpoint. And when I talk options trading and things like that, that's only 2 to 5% of the overall allocation. And at the rate it's going, it could eventually be zero, because that 2 to 5% could just lose everything and be worth zero, and then it's back to the drawing board. But you still have other things like your 401k, real estate, things like that, which I'll show towards the end of this video. But the point is, options trading, you can make a lot of money. In a bull market, it looks easy, makes a lot of people look good. I mean, a lot of the prominent YouTubers on here that got to be big, made a big name for themselves, they looked like geniuses when the market was going up consistently. I mean, after all, we're coming off of probably the longest, most sustained bull market in history. And I mean, you've seen a lot of people on here. And one thing that I'll never do, is no matter how big that I get on here, I will never pump something that I don't personally believe in. Like some of these companies, small cap companies, which traditionally, when you're like a long-term value investor or growth investor, you want to pick small cap companies if you can. But some of these, like the VGFC, very garbage food company, and like the Tattooed Chef and Voyager, which just went bankrupt, these were pumped a lot on this platform, but they're obviously not great investments. And one thing that I'll never do, and I'm not gonna, if other people do that for the ad revenue or for the sponsorships, that's their call, but that's something I'll never do on this channel. I'll never pump something that I don't personally believe in. It's to me, it's unethical, and it's just not something you do. If you're going to grow as a channel or as a business, I think you have to do things the right way, or you should at least. And that's what I intend to do. So with that being said, so the market was down again today. And if we look at one of my new favorite sites, trying to make sense of all this craziness this year, we're looking at tomorrow. And as far as US based, we have a 10-year bond news coming out, but the big market movers are going to come Wednesday. And there's already some different schools of thought on what could happen with this, depending on who you listen to, because it's not only YouTubers that can mislead you, but it's very much so the talking heads in the media. And I've already made a video on one of them. I'm not going to do too much of that. I mean, it's, the going after bigger channels and bigger talking heads in the media. It's fun, but it's not what I want to base this channel on. But I mean, it is addicting. Like I say, drama, like this space has become very much so like reality TV this year. And it's for new people that come on here that may see my channel for the first time, or may, just like I did when I never knew there was a finance space on YouTube until probably 4 years ago or so. I started looking up stuff I was already into, and I found this huge group of channels that talk about stuff that I've already been doing for years. But if you come on here as a new person, the difference this year is that the space has become more so like reality TV, less focused on actual content, because we're kind of in just like standard TV. And like I tell people that follow me, it's almost the same business as like network TV. You've got to get retention, you've got to retain an audience, you've got to get watch hours. And it's kind of hard to do that without being controversial. I mean, if you're just up here talking like a professor, talking about boring subject matter, you're going to lose a lot of people, because unfortunately, not to say that anybody's stupid, but most people are not going to be able to hold their attention on intense, boring subject matter, especially like the intricacies of economics, the financial markets. So you kind of have to make it fun. That's why in the past I've wore silly hats, I've done goofy stuff, but that's kind of the thing. That's kind of the business we're all in. And that's why I think we're seeing more and more of that. But as tempting as it is, I don't want to get pulled into that too much, but who knows? But anyway, back to Wednesday, July 13th, coming up about a day from now. By the time I get this out, it'll probably be the next day. So we have CPI data coming out month over month. That's expected to be, you see the red color here, that's expected to be bad news. But there's also some different schools of thought that there could be like a short squeeze. And then so the market could tank within the first hour or two. And then the market could, after the mini short squeeze, we could end up going up, which we've seen several times actually in the past couple of weeks. The market opens down and then it comes up. There's even been some trading days where the market has literally changed direction like 3 times in the same day, which is insane. So CPI data, and then we have some more. We have PPI the next day, and then by Friday, core retail sales. We actually have a lot of US based indicators, but 3 of them with major impact. Preliminary UOM consumer sentiment. That could be over the forecast. Preliminary inflation expectations. And the CPI data will be what the Fed bases their decision on how much to raise the interest rates on when they do that again this month. So that will definitely be a catalyst for the market in one direction or the other. And that's the thing, really, when you're kind of gambling on the market. In a way, the good news is, for one thing, the market's indiscriminate. The market doesn't care what you've done in the past, doesn't care who you are. It's going to do what it's going to do. So it's really, truly indiscriminate. But you have a 50% chance of being right because it's either going to go up or it's going to go down. So flip a coin, you have a 50% chance of being right either way. Even if you're completely wrong, like you had a 50% chance of possibly being right. But anyway, with that, I want to emphasize that trading and investing is not necessarily easy. And a lot of times, I mean, I'm a long-term investor myself, but there's also part of my allocation that I try riskier trades because I want to kind of accelerate things. I don't want to do the same thing for like 40 or 50 years. You know, I want to eventually be my own entrepreneur. I don't want to work a job that I hate forever. So I think there is a place, even though, you know, there's different tax advantages and whatnot. Obviously your 401k, your Roth IRAs, you want to do those things. But if you can do extra on top of that, you can take more risks with a smaller percentage of your overall allocation. And I think that's totally fine. I don't think that's like YOLOing or being too risky. And I'll show you the allocation again before I end this video. But like if you're going to invest in index funds, like in a year like this year where we have 8% inflation, in some cases, those funds aren't going to keep up with inflation. And at minimum, and it's really tricky in this market because you want to beat inflation, but it's like we're kind of getting screwed in 2 directions because inflation is kicking our butts and our investments are declining. So it's like we're losing money in our wallets sitting there in cash and our investments are dropping. But long term, you know, in your 401k and things like that, you're going to be in those index fund type of investments that are going to perform how the broader indexes perform, whether it's the S&P, large cap, small cap, mid cap, or subsectors of the S&P, so on and so forth. You're better off, you know, diversified in like a, you know, large cap or S&P fund. Whereas, you know, like in an option trade, you can just lose everything quick like that. So that is safer, but it's not something that, at least in my method, it's not something that you want to put all your eggs into. But with that being said, I'm going to go now to that spreadsheet and ignore this over here to the right because I'm not going to update this for 2022. This was how some of this that you see over there was how I did last year and in prior years, but I'm not even updating it until the end of this year. But anyway, this is what, when I talk about options trades and stuff like that, it's no more than 3% of my overall allocation. It's actually real estate is my biggest, followed behind the 401, or followed by the 401k, company stock, pension plan, cash, life insurance, things like that. So what I call speculative is just really 3% of the overall allocation. So I would say, to conclude this video, when you're following YouTubers, you probably don't want to follow people that may seem like they're putting everything into speculative, risky investments. You want like a, Warren Buffett, long-term investing mindset with some small percentage in speculative. Because remember, Warren Buffett himself trades options. He sells puts against stocks that he wants to get in for a certain price. And then when those expire, a lot of times he keeps the premium. And there's the infamous case where he made 7.5 million in one day on Pepsi or Coke puts. So with that being said, I would say that's what you want to do. And you have to be discerning yourself when you hear different people talking, to know. And I mean, I've been bit by different misadvice, or is that the proper word? Mal advice or wrong advice with different talking heads in the media and things like that. And one of them I hammered in a prior video. But sometimes it's easy to watch somebody that's kind of a sensationalist on their show and be led astray. But you as the viewer kind of have to be discerning to an extent, and protect yourself from bad advice. So with that being said, hope that was valuable. Please remember to like, comment, and subscribe. And I'll have some more videos coming out about the state of the market. We'll see how we do by the end of this week, and stay tuned for that. Thanks so much for watching. Take care.